Tuesday, the 4th of July, and we are on the FTSE 100. Okay, so I have just entered into a long position on this market. Got a signal at 9:45, and then I was triggered in at around 10 a.m. when this candle popped up. So for this trade today, well, the first thing is the last couple of weeks, I went over with the live trades, a couple of different ways to approach the market. I went over defensive trading, and then I also went over looking at closing partial profits at sensible levels, which can help if you're unable to read the market very well. It can also help with the psychology of the market making a retrace. If you've already locked in profit and you see that retrace, you don't start to panic and want to exit because you're fearing that the market is going to hit your break-even point and you're going to have been in the trade for, I don't know, an hour, 2 hours. You could have had 10 points, but you ended up taking that break even. Now, coming into today, this one has set up in such a way that, first of all, with my subscribers, last couple of weeks, maybe 1 week, 2 weeks, I've been going over the way you can approach the market in that you don't need to always be looking for home runs. So what you can see is the zone up above. I have a little red arrow in this zone, and for me, that means it is a strong zone for the day. So looking at the higher time frames, doing the analysis, this was identified as a strong zone, a high probability zone. If I see a setup in there, I would expect some sort of, a good trade to come from it, a good movement. This one here, it doesn't have one of those arrows, and all that does is it signifies to me, it reminds me during the trading day that if I get a setup here, I'm not looking at this zone as lining up with as many key levels. So it's not quite as high probability. And then what I'm going over is that it's okay to be a little bit cautious at these areas. So you only want to be looking for perfect setups. Everything has to line up very well. Now, what has happened with this market? Let me just take you through exactly what I was looking at. So the market this morning was chopping sideways like this. We then pushed up into this level of resistance. The market rejected once and it rejected twice. Now, that's a pin bar. That is a pin bar. However, I did not take those as a sell position. And why not? Well, a couple of different reasons. The main one being all of these pins down below. Sorry, I'm just trying to keep an eye on this trade also. I am in a live trade. I'm just paying attention. Really, I'm looking for this to come up into these levels, around about 7.375 for an exit. Hopefully it breaks up and reaches those levels. Okay, so with the sell positions, the setting up, you get in the pin bars. Now, a lot of people, market comes up into their zone, their support and resistance levels, whatever you want to call it. They get the signals, and they just want to jump into the trade. But it's always worthwhile looking at the market and seeing what it's doing. The market has been chopping multiple times for from 8 o'clock all the way up to this candle here at 9:05. So for over an hour, the market has been trying to break up through these levels and failing. We then push up and break above those levels. Now, with market structure, what you very often see is the market moving in a specific kind of way. So when we break above previous structure, this is minor structure on the 5-minute time frame. If you start to see a pullback, it's very often you will then see reactions at that structure for continuation. So getting into sell positions here didn't make sense for me because you'd be basically selling right down into this level that we've just broken above. So then sit on your hands, you wait, the market then breaks above, and then it makes that pullback. Now, coming into this morning, my preference was selling into rallies, with this being one of the key zones. However, the market is now telling me that, first of all, this level of structure. We tried to break down here, we failed, we came up, we tested, we then broke above, came back down, tested, we broke above in a stronger bullish movement, which also broke above this area right here, which is a support and resistance zone. So when we break above resistance, it often becomes support. We're pulling back into that support. Market is coming down, testing these levels. And I was actually looking to get in blinds down here, but it just didn't come down quite far enough. My order was set at 7,353. I wanted it to really come down and test this level of structure if I was going to get in blind. You know, if I'm getting into a blind position, I want everything to line up absolutely perfectly. It just didn't quite reach those levels. Didn't get triggered in, but then we got this pin bar at 945. The market then pulled down, failed. Pulled down, failed. We then break up. And we break above this pin bar. Now, what was I also looking at? Well, after I got into the long position, I was watching this level. It's relatively close to the entry for the trade. If this candle here had just pushed up and then rejected back down below these levels, I would have just came out of that trade for one point profit, 2 point profit, because this for me is not a key level. So I want to be a little bit cautious, but we have now broken above this level. So I'm willing to give it a little bit more wiggle room, with the target really being up toward these previous highs. We also have the key zone up above. You know, if the market does press up into these levels, it would be likely we would see a test of this area up here. But I'd be happy to get out just before those levels. So that is what I'm looking for in this trade, and that is how I have looked at the market this morning. Does not mean the market will break up. You know, as a trader, you can do all your analysis. You can spend a very long time doing your analysis the night before the market opens, or the night before you're going to be trading. You come to the market in the morning, you do your analysis. You've got a very clear vision of what the market is telling you. You have a very good idea of where you want to trade from. You can then sit down at your charts. Everything will set up in a way that lines up with what you're already looking at. You'll then get your entry, you'll take a trade, and you'll get stopped out. That is all part of trading. You know, it's a probabilities business. I always go over this. It's probabilities. No matter what happens, you are going to suffer from losses. What we're trying to do as traders is give ourselves the highest chance possible of taking the winning trade. And what that does is it starts to put the probabilities on your side. You know, if you're only taking those very high probability trades, the very likely outcome is that you'll have more winners than losers, or even if you're having more losers than winners, you've got a good risk to reward strategy, and then that begins to work out in your favor. That's all we do. It's important that you don't allow losses to, if you're taking proper trades anyway, it's important not to allow losses to make you think like you're a bad trader, start beating yourself up, start having a bad day. You know, it's all just part of trading. So for this trade, that's the way I was looking at it. It's a form of defensive trading again, because this is not a key zone. And really moving forward, especially for the live trade videos, if I'm taking trades off of these zones in future, I am going to stick to this more cautious approach. So it's a lot more important, in my opinion. You know, there's plenty of traders out there who just post up winning trades, big, you know, 1 to 3 risk to rewards, 1 to 5 risk to rewards, whatever. But it's not the case that is what you're going to experience all the time. Certainly not as a day trader. So what I'm going to do is, if I'm trading off of these, I don't want to call them weak zones. They're not weak zones. They're just support and resistance levels that I don't have a number of confluences to back up. Delete. There's support and resistance zones where I don't have a lot of confluences to back them up. I very often just trade defensively. That would have been an example. You can see we popped up here, closed up above the levels. If we hadn't done that, what I would have done is close out the position for 1 or 2 points of profits, or let's say I'd closed up here somewhere, still looking like a bullish candle. I would have then waited, and if it started coming back down against me, I would have closed it out at break even. Okay, so we're in this trade. That's what I'm looking for. I'm looking for it to come up into these levels up here where I would exit. So let's see how we get on. Okay, the market is just pushing up towards the target now. I should just mention where I've highlighted this area of support and resistance, you can actually drag it further across to the left. You can see we tested at these levels pre-market at 7 in the morning, came down, tested again, came down, tested again before we had that breakthrough. Just watching this trade, we have made a pullback with a strong bearish candle. Now, there's a couple of reasons I'm still happy at present to hold on to this trade. I don't want to see further strong bearish action after this candle. However, as we went over with this section here, we pulled above, came back and tested. We've pulled above here. There's the potential there that we're just coming back to test the previous swing once again. And also, if you look at how the market has been moving up, we've been making the low, higher low, testing, higher low, testing, and then we've pressed above, came back down, and we're potentially testing this upward trend line, which is lining up with the previous structure. So for those reasons, I'm happy to remain in the trade, looking for that movement up. Let me just clean this up just a little bit because it is starting to look a bit of a mess. Okay, so I'm just waiting to see if the market breaks up into that target level. Don't really want to see strong bearish sentiment once again, as I have mentioned. Right, the market has came back up for a third test of this level. Basically what we did was we came back up into this area. We then drifted back down into this area I was looking at right here. We did not see any strong bearish action through that level. You can just see we came down, we tested, then we started creating those pins. So I was happy to wait for the market. It's then pressed back up for a third retest. Now that we're back up here, we have seen the market testing just below those levels, and we are now up here for a third time. If we start to see rejection once again, I will just be exiting this trade. There's not enough reasons to stay in this anymore, so I would just come out for a smaller profit. I'm just waiting to see how the market reacts now that it has ramped back up into those levels. It came down, it's tested the previous swing once again. It has then attempted a bullish run up. So now I'm just waiting to see how the candles close. Okay, so I've been in this trade for around about 2 hours and 50 minutes now. We are just stalling up at these levels. And 2 hours seems to be sort of my limit when it comes to trading. After 2 hours, when day trading, you have to watch the market a lot when you're day trading. I tend to get a very bad headache. So I'm starting to get a headache. I am still watching this market. Now, what I'm looking for now, we have been producing bullish tails each time we have tried to break down, but we're also rejecting to the bullish side. So what I'm looking at for this candle is if we don't close above this level, which is really at 7371.8. If this candle does not close above those levels, I will just be closing this trade out and calling it a day. It's the 4th of July, so the markets are relatively quiet. It's an American holiday. We are just stalling at these levels. We've already had the rejection once. We've came back up and we're testing. I don't want to be holding onto this trade any longer. So we'll see how we get on when this candle closes. Okay, the market has pressed up into the target level at this 1250 candle, and I have just exited the trade. So it's from the overnight double top right here. We're just up testing those levels at present. I'm more than happy to now get out of the trade. So very, very long trade, that one, well over 3 hours. You can never tell when you get into a trade how long it is going to take. The more you look at the screen as well, the more difficult it becomes to maintain your focus. But that's the trade completed. It is the 4th of July, so I'd just like to say to any Americans who are watching, hope you have a great day. And my sister actually lives in America. She lives in New York. However, she is back visiting us in rainy Scotland. So we are going to be, or we're supposed to be having a barbecue today for the 4th of July, and in typical Scottish fashion, it is pissing it down outside. So we'll see how that goes. It'll probably end up being a 4th of July Domino's pizza. Okay, guys, so that is everything for this week. As always, I hope that was helpful. I hope you've all had a good trading week. I'm James Orr, and thank you.